What's going on, guys? This is Amish APJ. Today I have a special video for you guys who've been curious about my order block scalping model. So if you don't already know, I trade higher time frame context and narrative, using that as my reasoning, my thesis behind a trade. Then I drop down to lower time frames and I execute with 1 minute and 30-second inversions. So very precise and surgical entries. Again, using that inversion entry model. But my strategy really comes from higher time frame narrative, right? I use things such as daily discount premium, liquidity, higher time frame, FVGs, order blocks, all of that, culminates for me to have a bias, right? And then I drop down and I'm very precise with my entries, like I said. But sometimes there are no inversions, right? There's no fair value gap to inverse. So just jumping straight into it, we're looking at yesterday's price action. This is Wednesday, November 19th. You see, this is the open, right? This is our 930 candle. Here we do drop down. I have a bullish bias already going into the market just based on the fact that we're in a deep discount of our daily range, right? So this was, let's look back here. This was low of day. This was high of day. We had just tapped a discount. Okay. And then we had all of these highs over here, right? Very apparent if you go to a 15-minute or an hourly, these are consecutive lower highs on each candle. And then we see those represented as, swing high here, relative highs here, swing high, and then some trend line liquidity. Lots of reasons to be bullish. Tuesday we had a major sell off. So I was already anticipating low of the week being in. But the subject matter at hand here is the fact that there were no fair value gaps to inverse in this price leg. So how do you go about having such high conviction in your bias, but just not getting that entry model, right? Sometimes, the market just doesn't displace enough in manipulation to form those fair value gaps that we want inversions off of. So this is when my order block scalping method is applicable. Real quick, if you're not already in my Discord, you can join it for absolutely free. And as part of my premium resource section, about a month and a half ago, I published an order block trend scalping guide. So anytime there's not a fair value gap to inverse, we will look for these setups in order blocks. This video is going to be a corresponding breakdown, right? Just visuals for those of you guys who learn better with, walkthroughs and stuff like that. But if you want a more thorough breakdown step by step, join the Discord, look for this guide in the premium resources channel, and you can read all through it and kind of go back and reference it whatever you want to. All of that said, let's look at this action from yesterday. Okay, so this is 9:30 open Eastern Standard Time. Price drops down. We already have a bullish bias, so we know this is manipulation. And then just 3 minutes into the open, we get this beautiful, massive 1 minute displacement candle. No FVG to inverse here, like I said, but with that context and then this displacement, this is a valid order block entry, right? So the entire model, it's not, entering on order block retracements or when price comes back down and taps an order block. It's an actual order block creation entry. So, if prices, we have some sort of trend, or even if we don't have a trend, but then we drop down and we form some down close candles here, right? Let's say the trend is already bullish. We've established that. We form some down close candles here. We go about this one of two ways. If we want to get in on the move, right? After this retracement has occurred, let's say, we tap into a discount of this range, we have reason to resume our trend. Maybe there's relative highs up above, right, that we're targeting. What do we do if we don't have that fair value gap there, right? This is our standard entry model. That this is where we get that 90%, 89, 90% win rate from is these IFVGs. But if there's no fair value gap to inverse there, let's just say there's too many wicks. What I'm looking for is a close above these down close candles. So you can use these sort of interchangeably, fair value gap or down close candles, right? Both of those represent manipulation, going against that trend. Whichever it is, we're using that and we're looking for a close above. So let's visualize this even more. Let's say we do have, a buy side target up above here. We've drawn up toward it. We know that is our active drawn liquidity in the market, right? Price didn't penetrate it yet. And then we start to see this, retracement here, right? Price in this case would be, let me make this look nice and tidy. Let's say price taps into a fresh bullish FVG. Okay, so what do we have? My three contexts or factors of a setup is draw, delivery, and entry. Draw has been established that it's these highs up here, which we've drawn towards. Delivery in this case is going to be this fresh, whatever time frame. Let's say it's a 1 minute, fresh 1 minute bullish fair value gap. So check, draw, delivery. Next is entry. Okay. So in this case here, we see there's wicks that overlap these down close candles. That means there's no fair value gap. But what happens if our next candle looks like this? If our next candle looks like this, okay, we see displacement back in that original trend. The key here is the trend was bullish and now we're seeing a resumption of that trend. If I see this displacement, but there's no FEG here to inverse, right? These wicks overlap and there's no imbalance there. This is what I call my order block creation entry model. Okay, I treat it the exact same way as an inversion fair value gap. In this case, it's just a closure above these down close candles. With displacement, this is an order block being created in the market, right? What are order blocks at the end of the day? They're a series of down close, well, in this case, since it's a bullish trend, they're a series of down close candles, right, that get displaced above. Um, so what I'm doing is I'm just entering on the creation of these order blocks. With this displacement confirmation, I understand that, okay, our trend is resuming. These were just a retracement. This is not a reversal. Our draw is still there in the market. I'm entering on the creation of those order blocks just like I would the inversion of an FVG, right? If it was an inversion FVG entry, that would just look like this, okay? Don't overthink it. It would just look just like that. Same concept, right? We're closing above. In this case, there just so happens to be an imbalance. This is my higher probability model because an imbalance, being closed above is stronger in my opinion of an entry confirmation. But sometimes that doesn't happen and we might have a wick there. So order block, entry scalping, all I'm doing is entering on the close of a displacement candle that resumes the original trend. Let's look at that on the charts. Okay, boom. Perfect example here. What do we have? We have a downtrend in the market, but notice that we consolidate here. We get a liquidity sweep here of low of day, right? So we're potentially thinking this might be AMD, right? Accumulation, manipulation here, sweeping low of day, right? These relative lows. And then we do see that distribution. So we've seen a reversal. We have the context that tells us this is a reversal. Now, what do we look for? We look for an entry. Now, first, again, draw a delivery entry. What is our draw? In this case, my eyes immediately go to these relative highs. Okay. Highs that were consecutively lower than the last. This is a strong draw for price to absorb these buy stops. So now, let's say this is current price action looking to the right. I'm looking for a retracement, which we are getting here, right? We haven't swept these highs, obviously. We see a bit of a retracement in price, and amidst this retracement, we have counter trend candles forming. What do I mean by that? Just bearish candles amidst this uptrend. We see those forming there. And then now on this candle here, what do we get? We get displacement. There is no fair value gap anywhere here in this small retracement. But we do have displacement and a confirmation of this original trend here. So this tells us this could be an order block being created, and it might be a good time to enter at the close of this candle. So if we were to do that, this is how the setup would look. We buy this close, we target, in this case, I'm going to be conservative. I'm just going to target this first swing high in the market, right? A draw on liquidity is just that. I don't need all of these highs to be hit, but if my bias is right, this high will get hit. And then I'm going to put a stop just at the low of this displacement candle like this, right? If you guys want to take partials or you want to just scale out, go break even, that's fine. Whatever the case is, we're going to be taking risk off at this first high. You can target those uppermost highs if you want, right? So anywhere from, let's see here, 1.4 up to 2.0 risk reward. That's great. So we'll buy this close. Okay. Trading view, I'm in replay mode. It's having issues with showing executions, but let's just say we're in at the close. Okay. We are expecting this to serve as a valid order block. So I don't want to see these violated. Okay. This candle has been clearly displaced above. So is this. This one, we're working on it, but we did close above that open, which is what's important to me, right? Order blocks, I'm just looking at the bodies. I don't really care about the wicks. Now, if we play forward, what do we start to see? We start to see that distribution higher. We see that trend resuming. Okay. And playing forward some more. Boom, our target has been hit. All of these highs were absorbed. So draw was correct. We have that retracement delivery. Then we have that order block entry. There was no FVG here on the 1 minute to inverse, but we did get an order block creation model that we joined in on the trend, right? The most important factor about this setup is that we have a trend. I'm not taking these for reversals. I never take order blocks for reversals. But if there is a trend that I want to be a part of because there's a valid draw, I'm going to wait for that retracement. Hopefully I get a fair value gap that can be inversed. But in this case, in the cases where there's no FEG to be inversed, a closure above these counter trend candles is my entry. That is my order block entry model. All right, taking a look at one more example. This time it's going to be a short, right? So you've seen how we take these as longs, but let's look at a short example. Instantly, what I'm going to do is mark out our discount and premium. This was our session open here. You can use this high, you can use this swing high, whatever you want. I'll just use this swing high for basic discount and premium purposes. Now, this is low of day. Okay, we've sold off at the open straight down basically, and we have made a new low of day. Price has since bounced, and what has it reverted to? It has reverted into a premium of our New York session range. Okay, very important, right? And we are now tapping all of these fresh 1 minute FEGs, this being the uppermost, which we are now reacting to a little bit. With that context, right? I understand where we are. We're in a premium. We have low of day down here, very significant low, right? Anytime we're making new lows on the day and then we bounce up, if the trend is still there, we're probably going to make another new low of day. So that is my draw. Low of day is my draw in this trade. My delivery is this fresh 1 minute FEG up here, right? It's the uppermost in this downtrend, as well as a premium of our New York range, right? 930 open down to this low. Obviously, we're above equilibrium. That is a premium. Unfortunately, we do not form any 1 minute bullish gaps on this bounce up. Okay. You look, we'll zoom in a little bit more. Not a single bullish 1 minute gap. Okay. This is low resistance liquidity. All of these 1 minute lows. So 1, 2, 3, right? So on and so forth. All of these lows are higher than the last. This makes for a very easy sell off. Just knowing that buyers are trailing their stops there, right? The market can easily absorb these lows. You guys have probably heard the saying, staircase up, elevator down. It's very easy for price to cut through all of these lows, being that there's no FVG. So we can use that to our benefit. What am I looking for? I'm looking for a close below a handful of these up close candles, okay? The overwhelming trend is certainly bearish, right? We've sold off basically all overnight and to start the to start the New York session. So the trend is bearish. I am considering these as counter trend candles, right? Especially lacking displacement. I don't really trust that this is a bullish rally. I'm not going to be going long for sure, right? So what do we get on the next candle? Bingo, huge displacement to the downside. A resumption of that original downtrend, right, is now occurring. And we are seeing that reaction to our premium and our fresh 1 minute FVG. Now, with that said, what do we do here? We sell the close, right? These are our bearish order blocks being created in the market. This is our series of counter trend candles. We have that displacement. This is textbook ICT order block formation. I'm going to target low of day. That's my draw. And then my stop. You can be as conservative or, flexible with your stop as you want. If you notice, yes, we did form an order block. So one stop placement idea, again, just using the bodies of this order block, is mean threshold. So I'm going to get rid of this. You guys have seen we're in a premium. Just looking at this recent fib that I attached from, the open of this order block to the close, you could put your stop here if you want, 1.3 risk reward. That's great. Just above mean threshold of this order block. Or if you guys are more versed in ICT, you notice that this is now a breaker block, right? What was once I wouldn't consider this the strongest bullish order block because there was no FVG formed above it. But if you do consider it a bullish OB, that has turned into a bearish breaker. So you could even put your stop at the high of this bearish breaker or the mean threshold of it. 2.5 risk reward, that's great. Some of you guys are picky and you only take trades like that. So even if you wanted to do that, that is absolutely fine. Again, we'll sell that close. TradingView still not working with these executions. But anyway, let's pretend we are in on this close. We're targeting our low of day draw and our stop is mean threshold of this breaker block. This is how the trade plays out. Boom. Okay, good. We're respecting this fresh 1 minute bearish FVG, right? That we formed here. So that's being respected. Stop is still good in the market. And boom, bingo. Another successful trade, this time to the downside, utilizing my order block entry method, right? You can take this in both directions, obviously. And you just need that context, right? When I tell people I'm a scalper, yes, I'm entering on these 1 minute and 30-second charts, but I'm using higher time frame narrative, context, discount premium, trend, all of that stuff to formulate my trade ideas. The entry model is just simply a way to get in on the move you believe is going to occur. So I hope this has been helpful for you guys, right? Join my Discord for absolutely free. Go to payoutapproved.com. You can join for free. We're also offering a 7-day free trial for my premium all access group where you can trade live with me. I trade live every single day. So join it either, free or 7-day trial, whatever you want to do, and get access to all of these guides. Right. I hope this is some value to you visual learners. If you guys want more guides like this, tons and tons of resources, exclusive video guides, the 40-page blueprint course, join the Discord. Just go to payoutapproved.com. Link is also in the description, and get to trade with us. Learn from my mistakes. I've been a full-time trader now for 4 years, but I did lose a lot of money and a lot of time on nonsense in the beginning. So my goal is just to optimize that learning for you. I'm sure you can do it on your own, but just like I tried to do it on my own, I was taking 2 steps forward and then 1 step back. Why don't we just start moving forward without, that friction? So, guys, I hope to see you in there. If this was of help to you, please leave a like and consider subscribing, right? I'm always posting valuable videos like this, either in long form or my short form content, quick digestible videos. Other than that, guys, I will see you later. This has been Amish, APJ. Until the next video, have a good one. Bye-bye.